Welcome to the Real Estate Podcast, where we decode the trends, strategies, and insights that drive smart property investment. I'm your host, and today we're unpacking one of the hottest markets in the United States, Las Vegas. The episode is titled, Las Vegas Real Estate, What's Driving the Boom? Las Vegas has always been a city of spectacle, bright lights, entertainment, and high-stakes everything. But over the past few years, it's evolved from a speculative investor playground into one of the most aggressively expanding real estate markets in the country. So what's fueling the momentum? Let me start with a quick story. In early 2022, I met Angela, an investor from California who was tired of sub 4% cap rates in Los Angeles. She was looking for better yields but didn't want to go fully rural or out of state, so we turned to Vegas. At that time, the media was buzzing about inflation, migration, and housing shortages, but underneath the noise was a deeper trend. Vegas wasn't just rebounding from the pandemic, it was reinventing itself. Angela ended up purchasing a fourplex in Henderson. The numbers: $780,000 purchase price, a 7.6% cap rate, and full occupancy within 60 days. That's not just luck, it's strategy plus timing. Let's break down the main drivers of the Las Vegas boom. First, in-migration from California and other high-tax states. Nevada has no state income tax. That's huge. Thousands of residents, especially remote tech and finance workers, are moving eastward from California. In 2023 alone, Clark County saw over 40,000 new residents. This influx is putting upward pressure on both home prices and rents. But unlike Miami or Austin, Vegas still offers relative affordability, especially in suburban zones like Summerlin, Enterprise, and North Las Vegas. Second, hospitality and infrastructure investment. In the last 3 years, over $4 billion have been poured into new infrastructure. Think Allegiant Stadium, Resorts World, and a proposed high-speed rail to Southern California. These aren't just vanity projects, they're employment generators and long-term value drivers that's attracting both developers and blue-collar workers. The result? Rising demand across all segments: luxury condos, multifamily units, and single-family homes. Third, investor demand and high-ticket transactions. Vegas used to be a speculative flip market, not anymore. Institutional capital is moving in, Blackstone, Invitation Homes, even international funds. They're targeting build-to-rent communities and stabilized multifamily assets. Just last quarter, a portfolio of 380 single-family homes in the Vegas metro area sold for nearly $120 million. That's not flipper money, that's long-term capital placement. But let's also talk risks, speculation and saturation. With high returns come opportunists. New developments are sprouting up across the outskirts, some backed by strong fundamentals, others not so much. Be cautious of overhyped projects with little pre-leasing or weak infrastructure access. Short-term rental regulation. Vegas was once a haven for Airbnb operators. Today, licensing, zoning, and HOA restrictions are tightening. If you're eyeing STRs as your primary model, you need to run updated legal and zoning checks before deploying capital. Water and sustainability concerns. Southern Nevada faces long-term water supply challenges. While policy and planning are improving, institutional buyers have begun factoring environmental risk into pricing models. So what does all of this mean for investors like you? Las Vegas isn't just a boomtown, it's a strategically evolving ecosystem. You can play multiple angles: value-add multifamily, build-to-rent, suburban appreciation, and even commercial if you understand foot traffic dynamics. Here's a quick framework for evaluating Las Vegas real estate in the current cycle. 1. Start with migration data. Zip codes with inbound growth typically outperform. 2. Focus on submarkets with school investment and new transit infrastructure. 3. Underwrite deals conservatively but use realistic rent growth assumptions 3 to 4% annually. 4. If you're buying luxury or high-end, tie it to lifestyle hubs, golf, retail, or proximity to the Strip. 5. Build local relationships. The best deals in Vegas still close through pocket listings and agent networks. To close, remember this: Vegas thrives on momentum. If you're going to invest here, you need to ride the wave early, not late. Thanks for tuning into this episode of the Real Estate Podcast. If you found value here, make sure to subscribe, leave a review, and share it with someone who's watching the Vegas market. Next time, we'll explore the dynamics of flipping in the post-pandemic cycle, when it works, when it doesn't, and how to structure the numbers right.